Hi. All right. If you're here, that means you're a business owner and or you're just intending to start your business and you want to know about the basics of business finance, right? All right, great. So the essence of this recording is to give you solid foundation on what you need to know about business finance so that it makes it easy for you to set your business up for success, right? So for me, I've thought about finance, personal finance and business finance, right? When you're talking about business finance, I think I've thought about business finance for say about 2 years or more, right? And I've started a business and I've started multiple businesses. I'm currently running a business that has over 100 million revenue, right? So this is just going to be like a compression of lessons, right, to make what you need to know, right, and how you can handle your business finance. So it's basically going to be business finance 101 for you, right? All right, great. So there's something that I've come to discover is the fact a lot of people in Nigeria or Africa that say they are business owners, right? They are entrepreneurs, they are just starting out, they are failing in the part of knowledge. They are not getting the right knowledge before they set out. I think it was Vusi that was saying it in one of his interview that the easiest way and the best way to get rich is the hardest way to get rich, which is entrepreneurship. Because when you look at entrepreneurs, they are the one that get paid last. Most people think entrepreneur you get paid first. No, when you look at the income statement, you would pay your supplier first, you pay your employees first, you pay the government first before you actually get to pay yourself, right? But when I saw that interview, I got to realize that a lot of entrepreneurs, a lot of people that are doing business in Nigeria currently, they are just starting business, first time founders, first time entrepreneurs, right? They actually don't know how to read income statement. They don't know some basic things about personal about business finance. I mean, some of them cannot even define what cost of goods sold is. They can't even define what SG&A is, right? So which is why I'm making this video. And the goal of this video is not to beat you down, right? Is to empower you with the knowledge that you need so that at the end of the video, if you're having a conversation with an investor, with your banker, or with anybody, they would know that you're not just doing business, you're not just solving problem, you're not just selling the product. You understand the intricacy of what it takes to make your business successful financially. All right, great. So for that, I've made a slide. So let's get right into the slide. All right. Okay. So, right. So, like I said, this is Business Finance 101, right? And one thing that I've realized from teaching about business finance, startup finance, right, for say about 3 years now, right, is the fact that Business Finance 101 does not have to be about the buzzword, definition of terms, and all and all and all, right? It could be very practical. Making it very, very practical will help you to get started on the spot and you know what you're doing. It delivers value directly to you without the definition of buzzword and all. So in this session, there's not going to be definition of buzzword. I'm just going to dive real into the lessons, right? And while in the lesson, some of these buzzwords, some of these terms will be defined along the way. So you have to be attentive, right? All right, great. So Business Finance 101 is very simple, like I said. You just have to know some key things that you need to survive in the business. For example, now, it's Business Finance 101 to know that revenue is the most important thing in your business. No matter what you do in business, all your business activities are geared towards revenue, making sales, selling your product, selling your service, whatever it is, making a sale. And when you now sell, that's where your business finance will start from, right? After you make the sale, what's the end goal? Because if you're starting a business, apart from the fact that you're fascinated by the problem, you're fascinated by the industry, you want to provide solution to people, at the end of the day, you also want to get paid, right? So which is what you need to know. So it's not only about selling the product, making sales now, generating revenue. No, it's about understanding that after revenue, there's some things you need to know that would help you as an entrepreneur to get paid. So that's where we're going to, right? But before we get started into some of these things, why do you need to pay attention to the financials in your business? Why does financial matter? The first reason why financial matter in your business is to manage your cash flow. Like I said, if you're doing business, you're solving problem, you are making sales, money would come into your business. Money would come into your business. If you fulfill all necessary business principle, right? You find a product that people need, something that people have need for. You find the right people that can that need it and they can afford to pay it, and the need is urgent, right? And you sell to them in the best way possible. They are going to fall in love with your product. They are going to give you cash. And you are going to have money. But how do you manage this? That's what business finance would help you do. It helps you to manage your cash flow to ensure that your business know what is coming in and your business know what is going out in terms of cash. And it also helps you to ensure that your business as an entity can take care of its bills, can pay its expenses, right? It doesn't make sense, say, you put 10 million into your business this month, and 3 months down the line, you still have to put another 10 million into the business to pay the bills for the business. No, the business should be able to pay its bills at some point and, I mean, grow from that place, right? Then another reason why you should pay attention to finance in your business is it helps you to know your profit versus your revenue. So I'm going to say this. Most first-time entrepreneurs, first-time business owners in Nigeria, right? They make this mistake, especially the youths, right? They make this mistake of thinking that if you make a sale, say you're an online vendor, you make a sale for, say, a sneaker for 50,000, right? And your supplier sold it to you at 30,000. They assume that the 20,000 difference is their profit. No, 50,000 is your revenue. 30,000 is your cost of goods sold. 20,000 is your gross profit. After your gross profit, there's a lot of things you need to pay for before you get to your net profit. So when you're looking at profit, there are different types of profit, and it's one of the things that I would also learn. So why financials matter in business is it helps you to understand now that even when you have profit, there are two different types of profit. All right, great. Then help you to know how to maximize profitability and ensure that your business is sustainable and it's growing. Then the third reason is it helps you to understand how to read a financial statement, right? To know what you own, what you owe, and manage the business overall. All right. So let's get started into it. Business finance 101, like I said before, for me, I've discovered that it's not supposed to be about the buzzword definition of terms, right? It's just supposed to be practical, something that delivers value to you directly. So, which is why we are going into reading financial statement, right? So, what are financial statements? Like I said, you learn the buzzword, the terms along the way. What are financial statements? Financial statements are documents that shows the financial activities of the business. That document that shows you the financial activity in the business. Say you pay somebody, somebody pay you, you pay for a bill and stuff like that. There are documents that has been designed by accountants or by the accounting world to capture all of this and tell you what is happening in your business. That is financial statement. Now let me make a statement here. Most time, entrepreneurs in Nigeria, first time founders, first time entrepreneurs, first time business owners think that they confuse financial statement with bank statement. Check those words. Financial statement, bank statement. A financial statement is a statement that covers the financial activities that happen in your business, in the business. While a bank statement is a statement, it's more like a report that the bank, your banker would give you that shows activities that happen in your bank, not in your business. The activities that happen in your bank account, not in your business. So I've seen a couple of business owners, I've worked with a couple of business owners, and they want to maybe value their business or they want to maybe do some projection for their business. And I'm like, oh, yeah, give me your document that you guys use in the business, your record. And they send me their bank statement. And I have to start explaining that this is for your bank, not for your business, right? So bank statement is different from financial statement. So let's get into it. So there are three different types of financial statements. This is already showing you that the bank statement is different from a financial statement, right? There are three different types of financial statements, right? The first one is income statement. The income statement is the statement of operation, profit, and loss. What does this mean? It's simply a statement that shows you at the end of the week, at the end of the month, at the end of the quarter, or at the end of the year, did your business make profit or loss? That's what the statement does. So you see the difference now. If you're getting a bank statement from your, say, your Zenith Bank, your GTB account, right? The bank does not show you profit or loss. They just shows you your credit alert and your debit. And maximum, they show you what the cash you have left is in your account at the end of the month, right? But an income statement, one of the key financial statements, shows you profit or loss that you made running that business. So as a business owner, you don't want to just know, oh, 10 million came into the bank account and say 9 million left. The remaining 1 million, is your profit or you're actually still owing somebody, right? So that's what income statement does for you. It shows you the profit or loss that your business made over a given period. While the second financial statement is the balance sheet. The balance sheet shows you the financial position of your business. What does that mean? It shows you how much your business is worth, basically, right? It shows you how much your business own, what you own, and how much is worth, and what you owe to people, say debt and stuff like that, right? We'll get to know more about it once you're drilling down into it, right? Then the last financial statement is the cash flow statement. The cash flow statement basically shows you the inflow and outflow of cash in your business, right? The amount of cash, not physical cash. I mean, money that comes into your business and the money that lives in your business. So this is it. Let me make this more easy to understand why this cash flow statement is important, right? So you're an online vendor now. You started your business as an online vendor. Most time, if you sell, your customer will pay you, then you pay your supplier, then the whatever they are buying, whatever product they are buying goes to the customer, right? So most of your transaction happen in cash. So your business is dealing cash, either physical cash or bank transfer, right? But when you get to a stage, say where you are big, you have a very large store, a warehouse, and you are dealing with big organization, maybe you are supplying government and big corporate organization, right? You would discover that at that stage, not all your transactions would be paid for immediately. You might be supplying goods or product towards, say, 20 million, and maybe 6 million would be paid for upfront. So that means you still have 14 million with your customer. But that does not mean the transaction has not happened. The transaction has happened, but it's only 6 million that's entered into your bank account. So if your cash flow is going to show, your cash flow is going to show 6 million coming in. But your income statement is going to show that you made a sale of 20 million. You see the difference now? So your bank account will be your bank account, either your Zenith Bank or anything, will only be capturing the 6 million that came in. It's not able to account for the fact that you made a sale of 20 million, right? You get the idea. The same thing, say you want to buy from your supplier, right? At that point, say the cost of buying that product from your supplier is 10 million, right? Because you are not being paid in full cash, you spoke to your supplier that, oh, you can't pay the person in full cash. So maybe you pay the person 4 million now. That means the debit in your bank account would be 4 million, right? Not the 10 million. But you had made a transaction with your supplier for a 10 million worth of good, and you have received the goods. You get the idea? That's why when I speak with entrepreneurs and they only show me their bank statement, I'm like, this does not say anything about your financial activities in the business, right? So let's now go down into it, right? So let's take the income statement for startup. Like I said before, the income statement shows profit and loss. So how does this shows profit and loss? So when you make revenue in your business, so when you make sales in your business, that's revenue. You remove your expenses from it, the direct expenses, the indirect expenses, tax, and every other thing that you need to pay for. Whatever is left is your profit. That's what income statement shows you basically. We'll see more of this practically. That's what income statement shows you basically, right? While for balance sheet shows you what your business is worth, right? The financial position of your business, how you're standing, right? It shows you the assets that you have in your business. And your assets can be current assets, it can be non-current assets. Current asset could be cash that you have in your account, it could be inventory, stocks that you have that you've not sold, maybe from the previous week or from the previous month, right? Then it could be intangible asset as well. It could be non-current assets as well. Non-current assets, example, like it could be your building, your machines, every other thing like that, right? Then it now compares that with the liability, how much you are owing people. You could be owing the bank, owing the suppliers and all. By the time it removes that, right, it removes that, it gives you the value of your business, which is equity. Equity. So naturally, your balance sheet comes in two different sides: the asset side and the liability and equity side. So when you add your liability and equity together, it should always be equal to the asset, because the asset takes into account your stocks, your inventory, your account payables, your non-current assets like properties and stuff like that. So when you look at this statement, this document, it shows you where your business is standing. So your business might be worth X amount of money, might have X amount of money in property, might have X amount of money. Your business might even have, say, 50 million in assets. All of your assets, current assets, non-current assets together, they might be worth 50 million. But does that mean that's the actual worth of your business? No. By the time you remove, say, the 15 million that you are owing the bank, you know that your equity, your investors' money, right? Ownership equity is the remaining balance. Do you get the idea now? So that's what the balance sheet shows your business, right? Then the statement of cash flow now. The statement of cash flow, like I said, I think there's an error here. Forget this part. So the statement of cash flow basically shows the cash that you had in the bank or in your hand when you were starting, say, the new month, and all of the cash transactions that happen during that period, and the closing cash that you have in the business, right? But the good thing is, when you're starting your business, you might not necessarily need to have all of these three statements. Yes, I've done business at different stages, and I figured that out. If you're starting your business out, say a small business or anything, if you're starting a small business, you're trying to achieve all of these documents, it will be stressful for you. So I'm going to tell you now, from my experience, that you don't need all of these three statements. Even if you are starting, you should not even focus on all of the three. The only thing you need to focus on is your income statement, right? Just get your income statements right, and you're good, right? And I ensure that all of your transactions, all of your business transactions happen on a cash basis, right? You get the idea. All right, great. So based on that, I'm going to be showing you an income statement. I'm going to explain how it works. So this is a snapshot of an income statement, right? So in an income statement, like we said before, an income statement shows you the revenue, the profit. It just shows you the profit or loss of the business at the end of a certain period, right? So the income statement always starts with revenue, which is this. It always starts with revenue. Revenue is the money you make from selling your product or your service to your customers, right? It starts with revenue. Then it follows by cost of goods sold. Cost of goods sold is the direct cost of getting your product into the hands of your customer. The direct cost of producing that product itself. Say for example, now you sell say for example, you're an online vendor, you sold a sneaker for 50K, that's your revenue. But your supplier charged you 30,000 naira for the sneaker. So 30,000 naira is your direct cost. It's your cost of goods sold. That's the direct cost of getting the sneaker itself. That's the direct cost of getting that product or service is your cost of goods sold. So 30,000 naira is your cost of goods sold now as an online vendor. So when you look at it now, out of your 50K, your net profit would be, oh, let's use these figures here then. Let's use these figures. So say you're selling a sneaker for 102,000 and your supplier is charging you, say, 39,000 for the sneaker. So that your direct cost of the product, or your cost of goods sold in this case, right, is 39,000. So as an online vendor, your gross profit, what you would normally say, my profit on that sneaker is 60,000 or 62,000. Your profit is 62,000. But this is where most entrepreneurs in Nigeria stop, especially first-time entrepreneurs, first-time business owners, and all. This is where they stop. They assume that if you sell a product for 100,000 and your direct cost is, say, 39,000, your profit is 62. Yes, to some extent you are right. Say you are 30% right. Your profit is 62,000, but it's not your net profit, it's a gross profit. So that means there's still a lot of things you need to remove from that profit, right? So your gross profit, right, it's 62,000. So when you remove your direct cost from your revenue, what you get is your gross profit, right? You get it's your gross profit. Then afterward, you start removing indirect expenses from that gross profit. Indirect expenses could be, for your case now, say an online vendor, right? I'm using this as an example, right? I think you can apply it to whatever case your is. So for an online vendor, your indirect cost would be the cost of data that you use every month to stay online, the cost of airtime you use to call your vendors, to call the logistic guy that is moving the product, right? To call your customer if they've received it, right? The cost of paying for, say, WhatsApp ad, or paying for ad, paying for this and this and this. That's where you start removing the cost. If you have a physical store, you have to remove rent, overhead. Then if you borrowed loan, say you borrowed loan from your mommy to start, you have to pay her interest, pay the interest on the loan, pay the loan back, depreciation, amortization. This is just, say your phone is a small Samsung and is already depreciating, and you're trying to save for, okay, see, in the next 6 months I need to get a new phone. That kind of stuff, right? So when you remove all of this, costs, all of these costs now add up to your indirect expenses. The expenses are not directly related to getting the sneakers to your customer, right? But these expenses enable you to be able to function and serve your customer, because if you don't have internet, there's no way you can track if your vendor has shipped the sneaker to your customer. There's no way you can get that customer feedback. There's no way you can confirm your customer got your product, right? So they are indirect expenses, but you still have to remove it from the revenue. Then after you remove that, you have your earnings before tax. It means your profit before tax. So whatever you have left is what you pay tax on. That's if your business is eligible for tax, right? If you've crossed the threshold of paying tax. So let's use this example. You can see that a business is making 100,000 in revenue. Their direct cost is 39,000. But when you add all the indirect costs together, what is left when you remove all the indirect cost from the 62,000? What is left is just 3,500. So if you are a kind of entrepreneur that didn't, if you're a first-time founder or first-time entrepreneur that don't know so much about business finance or how to read an income statement, or you don't work with an income statement, you would think after selling a product for 100,000, remove the cost of your supplier of 39,000, your profit is 62,000. You can spend 10,000 naira. You can spend 10,000 and it won't really affect the business. It's just 10,000 out of 62. But it would, because when you remove all of your indirect cost, you only have 3,000 left. So that means if you had spent 10,000 here, your business is already in deficit of 7,000. Your business is sinking by 7,000. So if you continue spending 7,000 every time like that, your business is sinking rather than growing. You do understand now? All right, great. So say you pay tax now. In case you pay tax of 1,002. Whatever is now left after paying tax, or if you didn't pay tax, say your business is not eligible for tax, is your net profit. It's this net earnings. This net earnings can also be called net profit. Is this net earnings that you can actually now spend or pay yourself as, oh, I'm an investor in the business. Oh, I need to spend, okay, now take 1,000 for my personal use. You do get the idea. So that's basically how an income statement works. And by the time you do that month over month or weeks over weeks, you have something as long as this. So that's the basic idea of an income statement, right? And how to read it. That's basically how to read an income statement, right? So like I said before, if you're just starting your business, what you need is an income statement. You don't need all of the statement. You just need to know about them, but you don't need the income statement for starter. Say your business is between say 0 naira to 10 million. Don't bother about cash flow statement, balance sheet. Just focus on your income statement. If you get your income statement right, it would help your business to scale. You would know what is wrong with your business or not. And by the time you want to expand, get say 50 million to expand your business, it will be easy to have that conversation with your investors, because they see that, oh, you focus on only income statement and you got everything perfect. You got everything right. Right. So let me now show you let me show us let me show us let me show us an example. Let me show us a very practical example of how to make an income statement for your small business, right? This is how you can make an income statement for your small business. All right. Okay. This is how to make an income statement for your small business. All right. Okay, great. You should be able to see my screen. Okay, stop sharing. All right. So the reason why I want to show us this is, I've said this, what I just showed you is how to read it, but how can you work with it? How does it really work? So that's what I want to show you, the inside of it, how it really works. All right, great. So my screen should be up. All right, great. So this is how to, we've known how to read an income statement. Now let's work with one. All right, great. So say whatever business you do, basically, like I said in that other one, your income statement will have the revenue, you have cost of goods sold, you have the gross profit. This gross profit margin, right, is just showing you what percentage of your revenue is your gross profit. So that means if your revenue is 3 million and your gross profit is 1.8, your gross profit is 58% of your revenue, right? Then your SG&A, right? Like we said before, all this those other expenses, the indirect expenses are SG&A. So this is how you would have it in a well-structured income statement. This is how it will be categorized and labeled. So let me now show you how everything would work and how you can basically like come up with one for yourself, right? So like we said, revenue is total money that you make. Cost of goods sold is the total direct cost of the product. Gross profit is the difference. Then this is just a percentage of the gross profit in the revenue, right? Then SG&A is all the indirect cost. The full meaning of SG&A is selling, general, and administrative, right? So all the other expenses that are relating to selling, to general and administrative, that's where they come in. Then cost of goods sold, this is COGS, right? Then when you want to now look at, oh, what percentage of your revenue is your SG&A, right? That you get 50% of it. Then earnings before interest, this EBITDA, right? EBITDA, right? EBITDA is earning before interest, tax, depreciation, and amortization. It basically just means that when you remove your cost of goods sold from your profit, you get from your revenue, you get this. When you now remove your SG&A from your gross profit, this is what you get. So when you have this, it means that this is the figure that you have before. This is what you earn before you start removing, say, interest, depreciation, and every other thing. All right, great. So let's go back to, so for this Excel sheet now, I've broken it down in such a way that each of these items have a sheet dedicated to it. Each of these items has a sheet dedicated to it. So let's go to the income first, which is the revenue. So say, for example, this is where you record all of your income, right? So say here you have the date, right? You have OPay, the account that people pay into. Say you have money point account as well. People that pay cash, you have cash column for them. Then here you have the total inflow. So whatever they pay year and year, it sums this up to give you this, right? Then refund. Say in the case where you have to make refund to your customer, you have a refund column. In the case where you have to make refund to your customer, you remove it. So that means by the time you have sum up all of this, if you have to pay refund to your customer, your revenue is less that refund again. So your total inflow. What your total inflow column? This column, what it does is it adds each of your revenue from all of these accounts, the OPay, the money point, the cash. It adds it together, as you can see, plus plus. Then you remove any refund if there is refund. But if there's no refund, it still leaves it. It's still the same thing, right? So by the time you had it for each day like that, you know what you made in sales for each day, right? Then it sums it up, it sums everything up for the entire year, for the entire month, right? This way, everything is summed up. So this is your total revenue for the month. So is this total revenue for the month that goes into the total revenue for your income? You do get the idea now, right? Is this total revenue that goes into that figure? Then when you now look at your cost of goods sold now, your cost of goods sold could now be, say, depending on your expenses. So this is I'm using this as a restaurant mode template, right? So say you sell food, you run, say, a food truck or something now, right? You pay for this, you pay for this, you pay for this, you pay for this, you pay for this. When you had all of your expenses together, each of the days, the expenses that you pay for, this is total. This is the final price. Is this final direct cost of getting all of these things that comes into your cost of goods sold here, right? Then your SG&A now. So what you basically do is you just subtract. As you can see here, this is just subtract. You move this from this. You just subtract, right? You remove your cost of goods sold from your revenue. You get the gross profit. As you can see, the formula here is showing B2 minus B3, right? Now, for your SG&A is basically simple, right? Your SG&A, like I said, is selling general and administrative expenses, expenses that relate to sales, maybe your marketing, expenses that relate to general, say operations, things, logistics for moving things around, administrative, say paper, nylon, stuff like that. You get the idea. So under the XG&A, you have payroll basically, because you have to pay people, right? Payroll, your employees, right? This I made it in such a way that you can record on the days that you pay them. For people that maybe pay wages or maybe pay weekly and all, and if you just pay annual salary, just type in the number when you pay them. Say 50,000 naira. I pay 50,000 naira on this. So basically, this just shows you. It sums it up. It has a formula in it that sums whatever you pay the person. So if I pay the person, so if I pay the person 50 on the 17, and I pay the person another 10,000 on the 20, 1,023, makes 51,000. You get the idea. It just shows you what your payroll is. So this is the payroll category. So now this is payroll for operation, payroll for marketing. We have people. So this is on the basis of you have different departments in your business, right? And you just have one department. I just list all of your employees out here, right? Then you have payroll for marketing. Then all of these have totals, right? The totals, right? Great. Then these also have totals for that department, total for the pay for the marketing, right? Great. Then subscriptions. You should not deny the fact that you have to pay for subscription in some things in your business. Subscription like internet. If your business requires DSTV, if it does contribute to your revenue, pay for it. If you have to pay for hardware, say a register or something, if your business requires to pay for Netflix, I mean, why not? If you require to pay for insurance for your staffs or gym membership for your staff, you have to pay for it. But you have to note all of these things and calculate it, note them down, record them, right? Then you sum all of it, or basically just work the same way, right? Then marketing, you should have a marketing section under your SG&A because it's sales, general, administrative, sales part. You can't have sales without marketing, right? So you have, say, billboard, Instagram ad, handbill, WhatsApp, giveaway. Say you're doing giveaway or discounts for you get everything is recorded, right? Then it's written down. Then now utilities, you have utilities. Under utilities, you have electricity, petrol, join, logistic, airtime, photographer. Say you are a fashion designer, photographer, maintenance, remitter and charges, waste management, furniture, stuff like that. So you are the CEO, you want to request a certain amount from the business. You could also record that down. Say as the CEO now, you are requesting, say, 250K from the business on the 19th. You note it down. Say on the 18th, you are requesting, say, 100,000 from the business again on the 22nd. You still note it down. At the end of the day, what it does is just helps you to know where your money is going to, basically. Because if you don't record, 350,000 might have gone out of your business and you can't even remember where you went to. But because it's recorded now, you can just come under your SG and look at, oh, for this month, I've requested too much money from the business this month. Oh, I've started tuning it down. You do get the idea, right? So when you total all of this thing under your utilities, right, it gives you the total. Then this general total here basically just give you, it gives it add up the total of each of these category, add up the total together. So your general SG&A, your overall SG&A is now 2 million and something. Then is this figure, right, that goes into this place, right, that you remove, right? So when you now remove this from here, and also when you remove that from there, you have your total, you have your what's left, your earnings, right? By the time we remove 350K for the CEO, now we already have, say, minus 200. So let's go back and clear some of this figure. Go back and clear some of this figure, right? So now you now have, say, 149, right? So say you make money from other expenses for other income. Say you have other income and expenses now, right? Say you're a fashion designer and somebody pay you commission for using your clothes to do a fashion show or something. You could record that as other source of income. It's not related to sales, it's just other income, right? You record it as, say, 500,000, and by the time you had everything up, you're supposed to remove your interest because you don't have interest, you don't have depreciation, you don't have amortization. You have 649,000, and net income now is 649,000, right? So, say we even remove this other source of income, you can see that this income statement now shows you what your business does actually. So, your business had the revenue of 3.3 million, direct cost of 1.4 million, right? Your gross profit was 1.89 million. Your SG&A was very high. Your overhead cost is still the same as SG&A. Your overhead cost was very high for this business. It was 1.7 million. That left you with 149,000 in any before tax and interest, right? So because you didn't have tax, interest, and depreciation, that was brought down, and you didn't have tax, that was brought down to your net profit. So as a business owner now, no matter how small your business is, you can see that your business is making 3 million in revenue, but your actual net profit is 149,000. So you know that you have to do something about it. So this is what income statement does for you as a business owner. You should be able to even read income statement. That's the basic thing. So knowing how to having an income statement for your business and knowing how to read it and populate it helps you to see this that, oh, my business is making 3 million, 3.3 million, but our net profit is 149,000. Then you start paying attention to the figures. Wow, I have to reduce my SG&A. Then it goes to your SG&A. Okay, what are the things that we are paying for? We are spending so much on furniture. We are spending so much. Okay, the what raised our SG&A this month is because we bought a new generator. So what if we didn't? What if we don't? What if we didn't buy the generator? So if we didn't buy the generator, right, then that means from a sales of 3 million, our net profit now is, our SG&A has gone back to 700,000 instead of 1.7. So that means if we didn't buy generator this month, our net profit would have been 1.14. I mean, as an entrepreneur, as a first-time business, as a business owner, at that point, you now feel relieved, you feel happy. Oh, it was because we bought a generator for the business. That's why our overhead cost went up, right? So now you understand. So even if you are ending up with 149,000 as net profit from a sales of 3 million, because you understand that it was the generator that you bought that made you have that high overhead cost, your mind is still at peace. You will not feel frustrated like you are failing in business because you know where that 1 million went to. You know what made this thing high. So basically, that's how an income statement works, and that's how you can basically walk around one by yourself, right? So if you need this template, you could always comment and reach out to me. I could send you this template for you to modify and make it work for your business. All right. I do hope you've learned something, and I hope this was valuable. So if you have any question, any other thing, just drop a comment down here. This video is going to be uploaded on my YouTube channel, so just drop a comment down for if you want to request for a template, or you want to ask any question, or you feel if you find anything useful here, Any comments, feedback, just drop a comment for me. All right. Thank you very much. It's been exciting actually doing this. All right. And finally, I wish you success and Godspeed in your business. Business is not easy, but keep going. You'll reach the good very soon.